Good Monday morning. This is Rich Morrison, and welcome to my latest edition of the Thinking Cap, where today we're going to look at the good, the bad, and the ugly of the markets and other things that we're working with and dealing with here in production agriculture. So I thought this was a good opportunity here. We are 4 days ahead of USDA's next supply demand report. That report will be out this Friday morning at 11 o'clock. We will get updated crop production numbers from the government, updated yield numbers. So kind of the calm before the storm here as we begin this week. But let's start out with the good. We've got several goods. And if you look back at the heat check column in the market report email letter over the last week or so, you can see that we've come off of a period where we had a lot of hot markets. Here to start the month of October, we had a lot of markets rally into late September, into the beginning of October. We had several commodity markets in the hot zone: gold, corn, cattle, soybeans, the stock market, et cetera, cotton market, bean oil. So a lot of markets were in the hot zone. We were advising, suggesting, not a bad time to take advantage of that and be making some sales. Here today, that number is slimming down a little bit, but we do have the meat market still in the hot zone. We've got the crude oil market making an appearance, strong rally. We'll hit on that here in a minute, plus the bean oil and the rapeseed market still holding strong. So let's look at a few of these good hot markets. Number one right now to me is the oil market. Oil is responding sharply higher to the situation in the Middle East. Last week, you can see the rally. We had rallied oil from about $66, now trading over $75 a barrel here today. So it's been the biggest mover over the last 5-6 days, certainly reacting to the geopolitical situation in Lebanon and Iran, Israel, et cetera, that whole area of the world responding right now. I would assume we're probably going to see a reaction at the pumps fairly soon, also because of the hurricanes that we've had, especially the new one coming into Florida. You would tend to think that we're going to see a reaction probably higher at the gas pump here as we go forward. The hog market, the meat markets, I mentioned a minute ago, but hogs are trading. It looks like they could possibly have their highest close today since clear back at the beginning of June or even in late May. So this is a pretty hot market. And if producers are looking to take advantage of the rally, certainly an opportunity here right now. The cattle market, even though we're a little bit off of the end of the week highs, still holding strong. We're holding above the 9-day moving average, the red line. I would caution this market, though. You look at the RSI and the stochastics, look like they're starting to tip over here a little bit. Might be getting a little toppy. If we break below the 9-day moving average at 185.72, probably means we're probably going to settle back down at least another couple bucks. The bean oil market has really been the driver in the soy complex, and we've seen good demand overseas for oil lately, cooking oil, bean oil, and that's been the driver here and helped support the bean market as a whole. And soybean oil pushing higher here today, despite the soybean market trading lower on some rains in Brazil over the weekend. Bean oil continues to push higher and probably pulled the soybeans back off of an early low last night. Minneapolis wheat is the strongest of the wheat markets, even though I don't have it in the hot zone right at the moment. It's firmed back up a little bit here this morning, pushing back off the 9-day moving average line. We've got really two big hurdles here: the 100-day moving average, the purple line at 645, and then this double top that we've made, up here in the low 650s. And if we're able to push above that, maybe we can get a little more of a bump. I would think that I'd have some offers in around 675, just below the 200-day moving average, if we're able to get back to that area. And why not throw corn in here? Corn's probably not in the hot zone at this point. We turned this thing over at the end of the week, and I did take corn out of the hot zone. However, we are holding above the 9-day moving average line here this morning after probing below it overnight, and kind of stuck in this really tiny range right now. It looks like technically, which way can we break out? I would tend to think that, with harvest pressure, odds are it would be to the downside here initially, but it's been resilient. And if the wheat market continues to hold firm, corn seems to kind of be following the oil market a little bit as well. And so we'll keep an eye on that. I do think that this is a good opportunity to get back to last week's levels. not a bad place to be looking at making some sales. If you got old crop or corn moving, if you got corn in the bin, I might hold off a little bit more, but certainly want to have some offers around 645, 650, or excuse me, 445, 450 up here below the 200-day moving average line. The bad. Well, the bad right now for us, it's the dollar. Now, the dollar's been rallying, but again, that's not a good thing for us in production agriculture because we rely on exports for so much of our market movement, and this strength in the dollar is not going to help us. Let's just say that. And so, this doesn't just happen overnight, but I did recognize last week that sales had really slowed down quite a bit in corn and soybeans. We're not seeing near as many announced sales, and so something to keep an eye on there as we go forward. Let's move on to the ugly. A couple of uglies, but the ugly is really the weather right now. Now, Brazil has been extremely dry, extremely warm. You can see the 90-day precipitation map on the left. In fact, South America in general has been very dry. This arrival of La Nina has had an impact on the weather there, and they're trying to get started planting crops up here in Mato Grosso in central Brazil. The positive news is that really October 10th is the starting of the planting season down there when they really start to ramp it up. And it just so happens there was some rain over the weekend in Brazil, central Brazil, and this outlook, it looks like both the Euro and the GFS models are calling for that monsoonal pattern to change into Brazil to start bringing some rains in off the coast. And so kind of just what the doctor ordered right now. We'll see if it occurs, but if it does, certainly that's going to be very beneficial to an area of the world that's very, very dry. Why is it a big deal? Everybody and their brother are forecasting record crop in Brazil this coming year, potentially a record crop in Argentina, but combined, the two are expected to grow record soybean crop. And so if that happens with bigger acres, look out for the bean market. Here in the United States, also the ugly. When you look at the forecast, this has really helped to rally the winter wheat market a little bit lately. Even though Kansas has had some rain over the last few weeks, you're expected to see the drought monitor increase or the drought development continue to increase in the southern plains. This is a typical La Nina type pattern, and La Nina is expected to stick around into the early part of 2025. So while La Nina may not have had as big an impact on spring crops as we had feared, certainly it can have an effect on the winter wheat crop. And so we'll be watching that pretty close as we go forward. One of the other uglies, of course, politics, but is the Farm Bill and the Farm Program, which did expire here on August the 1st. We no longer are sitting under a farm program. So PLC, ARC, as it stands today, we don't have them. Will we get another farm program in place? Will we get the extension, another extension of the 2018 Farm Bill? All of those questions are up in the air right now. But certainly this is could be a big topic. Certainly this is something that a lot of folks are concerned about, I think, as we go forward, especially with lower commodity prices and lower profitability in a lot of things. So we'll be watching this. I think the latest I keep hearing is that that Congress is probably going to push this back until after the election, maybe try to pass something in the lame duck session, or possibly an extension of the current bill at that point in time. One last quick reminder, if you're watching this and you're not taking advantage of some of the stuff that we do, I do an opening bell phone call every morning at 8:35 Central Time. With a 2-minute blast on the markets. We do an email letter called the Market Report each night, which is where I include the heat check column. I do an aftermath webinar the day following every month's USDA report. We'll do that one next Monday. And then, of course, these thinking cap videos like the one you're watching right now with an update on some things that are happening. So with that, I certainly thank you for listening to the good and the bad and the ugly, and we'll be back with you again very soon.